This is eCoffee with Experts, where marketers and founders share what's actually working in SEO, AI, and digital growth. Grab your coffee and fuel your mind as we chat with top minds about their wins, struggles, and lessons you won't find in a blog post. Brought to you by Digital Web Solutions, we bring real talk to help you grow your business, one episode at a time. Let's get started.
Hey, hi everyone. Welcome to your show, eCoffee with Experts. This is your host, Ranmay here. And today we have Tom, who is the founder and CEO at Eqvista with us. Hey, Tom, how is it going?
I'm good, actually, Mike. Thank you so much for having me. How are you
Lovely.
doing?
Tom, before we move any forward, why don't you talk us through your journey a bit, how it all started, how did you land up in the FinTech space? And we're going to take it from there.
Okay, perfect. It's going to be quite a straightforward question answer. So I moved from Europe. I worked for European Commission back in Europe, Belgium, Brussels. It was kind of boring job, admin job, where we were trying to influence the organic farming with multiple resources we had back then. And the European Commission's kind of really boring administrative job. So I moved to Beijing, spent there a couple months, close to 10 months. And then I headed to Hong Kong, where I launched my first business. My background's finance. I'm a double master degree in finance, quantitative methods. So we built our first FinTech company in Hong Kong. Then we built multiple other companies, mostly focused on telecommunication. We kept few. We also did acquire, and from there I moved to United States. I acquired one of the largest in Nevada, and from the acquisition and from my previous company Startup Bar, we did the same products, the same services. We help entrepreneurs to set up a company in the United States or in Hong Kong. We built one of the largest one in Hong Kong. On that side, we built also CPA firms. So I was always involved in the fintech industry, and because we were touching a lot of equity, when you set up a company, you need to issue stocks for founders, employees, investors. So from there, we were like, hey, you know what? We actually know quite a bit about equity management, stock issuance. So we started Eqvista, and that was the whole idea behind it. We had the knowledge, we had the expertise, because we started the company.
Mm-hmm.
Yeah, so that was it. That's the full story. So I took the best people from my previous companies.
Mm-hmm.
And they helped me to build the company.
Very nice, very nice. And you have built and scaled multiple businesses before Eqvista. So, what specific, frustration or what actually triggered that final push to build your equity management platform? So, if you can also help us understand through the initial days, where you're a founder, you're doing kind of wearing multiple hats. So if you can also
Yeah.
through your initial days, the challenges that you faced.
Well, it was kind of obvious what we should do. You open a company, and the next thing you do, you raise capital. So that was the whole idea behind nothing more difficult. And along with that, we also built nearby for startups, so we get all companies to open an account and get a Visa card called Checkly. So that's other venture. So it was obvious for us to get into that space.
And talking about, equity mistakes. So you have been in the space for quite some time now. So, what are some of the common, equity mistakes you see founders make in the first couple of years?
You know what? It sounds funny, but they just don't keep the proper records. So they issue stocks and they just don't record it. It's not even a mistake. I wouldn't even say it's negligence. People are busy, so they have a scattered information in the emails with the lawyers, with the HR, or with the founders, who's just issuing stocks to one of the employees. So it's scattered, between between multiple channels, WhatsApp or in the email or in one spreadsheet, other spreadsheet. So that's mostly recorded properly. The other thing, we might dive into different technicalities. One of the largest one, I think that's probably the biggest mistake, is the 409A evaluation. If you issue stocks in the US, you need to get 409A evaluation done for founders or employees. It's a common stock, so you need to get a value for the stock. So it's usually lower than the preferred stocks because of the the tax code. You try to keep it as low as possible, but within the regulation, because a lot of founders are issuing before the regulation came into effect. They try to avoid paying taxes. So Jobs Act came up with a guideline to how companies should value their stocks. So government get paid when there's exit, a possible acquisition. So that's, I think, other big mistake, the 409A. And the 409A should be done every single year. I wouldn't skip 1 year. So with Eqvista, we offer subscription. So you can subscribe and get 409A evaluation done. So that's big mistake. And what people usually are mistaken. They are confused about 409A evaluation and the preferred stock. So again, preferred stock or fair market value. That's something you agree on with the investors. You as an investor, you agree on the price. That's the preferred stock price. But with the common stocks, it's usually done by 409A.
And then how does poor cap, table hygiene silently hurt fundraising, hiring, and even exits, often without founders realizing it?
I can actually look at it from more like the business perspective, how it affects the hiring. We bootstrap the company, and I use my own financing, and we raise couple sales, nothing big. So the only way how you can keep building amazing company without much funding is that you have a great talent. And the great talent should get equity. So we are proud, we're employee owned. And I think the mistake here of the cap table hygiene, kind of slightly hurt fundraising, is that you don't give enough equity to employees. That's the biggest problem. So the incentive should be massive. You rather have a B plus player who's going to stay with you for 7, 8, 9, 10 years, or the end till the end of the company, acquisition or IPO, or if you're a failure. That's probably the biggest issue. And obviously, the B plus, but then we have an A plus who constantly leave the company. They are not really with you through the whole time, the difficult times. There is something called cliff. So you start distributing the stocks after 6 months, 9 months, 10 months. So there's the period where you basically say, like, I'll give you a piece of the company, but you need to wait until the cliff ends. So that's why you actually avoid either bad actors on your cap table. So from the hygiene, I think that's the hygiene sciently, that's the most question. So you careful with what you have on your cap table.
About us?
No, just in general.
In general, right? Yeah. So, and last, since 2022 November, with all the Chat GPT and all the AI platforms coming in, right? So there is a lot of I cannot say chaos, let's say organized chaos now that, we have kind of sailed through the storm, whatever there is, how has it affected, let's say AI, in the valuation workflows, and, where does it introduce unacceptable risk, the overall use of AI in your space, so to say?
That's quite interesting question. So I'll give you an answer around the data, right? So, and the models we use. So without the quantity and the data from the clients, you have a hard time to build the models. That's the biggest problem. So the chaos, yes, you're absolutely right. It is. But what's happening in our industry is that even though without AI, we have been having hard time to build all our models, fine tune the whole processes, because in the beginning you don't have a client, so how do you train your models, right? Even though you're a financial analyst, we can replace certain job with the AI, usually speed up the processes, especially reading the documents. You have
Yeah.
a profit loss balance sheet. You need to get it out from the PDF format.
So, Tom, what do you think about trust? When AI intermediates the way users, learn about valuation and equity tools now.
So that's just excellent question. You know why? All our reports are certified by evaluation analysts, and we don't stop just right there. There's a continuity. The report must be defensible, meaning if the tax authority or the IRS, any tax authority or IRS come in and they audit you, your company, you need to have somebody who answer the questions.
Hmm.
Sometimes you might have people flying attending the valuation.
Yes.
So
Yeah.
the certification must be there. Uh,
Hmm.
so that's something, you ask about the trust. That's something we are very proud of. We will never get rid of humans. So it's AI hour, the human element, the
Yeah.
human part is very important, because at the end of the day, as you know from your business, there's always somebody who, from the clients, who love to talk to little people. In our
Absolutely.
industry is very important. There's a lot of noise about McKinsey and Big Four, that uh, but there's always in this job, there's always a very good drama for the always somebody we have to be able to blame if something goes south or there's like something wrong. Who are you going to call?
Absolutely.
Who's gonna defend the job? I I certainly agree that the trust must be there, especially when we have a AI intermediary.
And I mean, in our business as well, Tom, for example, content marketing, right? So when we do a lot of content using AI, we still feel that, the end consumer of that content is going to be a human heart and a brain to make that decision to either buy a product or a service, right? So as much as you might want to write content keeping the Google crawlers or the AI or the different LLM crawlers in mind, but always remember that the revenue realization is going to come by a human making that decision to either buy or use your product or a service. So that ways, the human part of the content ideation or the storytelling part of it, the emotional question part of it, still plays a very important role in terms of how you want to communicate that brand voice with your target audience, right? So, like you said, as much noise there is, still the human part of it cannot be undermined.
Yeah, and especially with your business, we work with a lot of agencies, and it's just a complaint. Who
Hmm.
is going to handle the complaint tickets? The human must be there to figure certain things out. It can't be streamlined everything. And definitely, you wouldn't need to have. In our case, we have 16 valuation analysts, right? Just doing evaluations over $5 billion monthly. It's a huge number. Yeah, the largest one on the market, one of the largest one. And it can speed up the processes. It can speed up uh, the costs, per valuation. It can save cost per valuation. But you definitely need human being involved. And especially again, in our case, it's the certification, right? Because the certification is something authorities require. You just can't get valuation from anybody.
Absolutely. And finally, what part of the equity life cycle, Tom, you feel deserves more attention than the fundraising itself?
You know what? Think I think it's the real time valuation, the stock price, of an equity, because you know how it works. Look, we have a February 9th, right? You want to get appraisal of your company. You give us some financial data, let's say, 2 months old financial data. So let's say from November or December. Then we're going to ask you for a few more documents. You come back quite late, let's say about 2 weeks. We deliver the report by the end of February. So the equity life cycle in this case would be the stock price, the constant valuation and delivery, and how to deliver the stock price to your shareholders, because they should know the stock price of the equity. The way how it works now, employees can see the last 4 month evaluations, but that the rule of 4 month evaluation isn't really fair market value. It's mostly the lowest possible value out there, right? So, but that doesn't reflect what the employee or the founder is worth. So you need to exit like stock price. So that's what I think deserves the most at this stage. So you can see the stock price of your company in real time, and not just you as a founder, but also employees. And the fundraise gives you the stock price only at the closing, right? But what if you don't raise money for the 2, 3, 4, 5 years? The companies are like that. So they are not priced. So what do? We come in and just say, hey, let's actually do a real-time valuation. You can see the stock price in real time. It's based on over $300 billion in clients' assets valued. We have done for clients. We have an amazing data set. Our valuation is extremely precise. You can even benchmark the data, our data. You can monitor your stock price, the stock market price. So we pick publicly traded companies and we follow the index. So there's a lot of computation behind the real time. So that's what I think deserves the most attention from the management. That just fundraising stock price.
And, this has been a great communication, Tom. But before we let you go, I would like to play a quick rapid fire with you. I hope you're game for it.
Yeah, that's it.
All right. Your last Google search, anything that you would have searched about.
What I searched about, SpaceX and its AI merger.
All right. What did you do with your first paycheck of your life?
I saved the money. Yeah, I was accumulating.
Finance guy.
Yes,
Yeah, could have guessed. Yeah, I should have guessed.
They invest with them. Yeah.
Investing. Yeah. So if there is one thing, Tom, which you can change about your professional career, if you were to go back in time, what would that be?
I think mostly I would try to study how to handle blood pressure, because we are builders, we are farmers. And I think school underestimate the psychological effect, just mental health of farmers. What do I going through, with different ups and downs through your career? So I think that's why I would be a little bit more focused on. So the pressure is actually quite normal. It's part of our life, right? Just became so comfortable the way we live. We always freak out if there's something which is not going the way as it should. So I think that's the most important thing: the pressure, to study the pressure, how to handle downs, not ups, the upside. That's something you celebrate. But the downs, it's quite normal and it's very important.
Yeah.
So that's what I think. You know what I'm talking about. It doesn't have to be just in a business. It can be in your personal life, right?
Okay, moving on. Your favorite sport?
Hockey, ice hockey.
Nice. That's an aggressive sport. Yeah.
And it's very fast. Yeah, it's very fast. Yeah, I used to play hockey. I used to play ice hockey, and it teaches you a discipline. You're 6 years old. You have to wake up at 5 in the morning to go to the practice, meaning that you have to already start preparing yourself the evening before. It shouldn't be very heavy food. You need to go to bed very early. You need to wake up. You need to be fresh. Can't be just going there and just punching and just do nothing. So I think it's okay. It's definitely.
Yeah, sport needs discipline, right? So I can really,
Yes.
yeah, it demands that. Perfect. Great, yeah, Tom. This has been a great conversation. I'm sure our audience would have loved the insights you shared today. Thank you so much for taking out time to do this with us. For our audience, if they want to reach out to you, how do they do that?
So my email address, it's Tom, Tom at Eqvista.com. I always respond any emails. I believe that there's opportunity in any reach out, and it's up to me to filter that. But yeah, reach out to me. I will be happy to help you with mostly equity management, valuations, and most importantly, the product we just built, real-time valuations. So you want to see the stock price in real time. I'm happy to help you do that.
Okay, perfect, Tom. Thank you so much once again. Yeah, cheers.
Thank you so much. Cheers.